Today's video is all about OPENFABRIC, Layer 1 for artificial intelligence, a planetary scale network for building and connecting decentralized AI applications. In today's video, we're going to be doing a deep dive, looking into the team, the tokenomics, the overall value proposition, and figuring out whether if this project has what it takes to make it to our portfolio for the up-and-coming bull run. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is OPENFABRIC an opportunity? Of course, we're going to be doing a deep dive today, looking into a lot of the details with regards to this project, figuring out whether it has what it takes to make it to our portfolio for the up and coming bull run. And of course, we're going to be using this website, the website as our main platform to navigate the project, to figure out if it has what it takes, the fundamentals, if the fundamentals are there. And of course, let's begin. Let's take a look at what's going on here. Overall, I like the intro. I like what it has to say here. It's really quick, straight to the point, artificial intelligence. And of course, what I'm getting from it, it's a way of building an ecosystem, which I appreciate. Of coming from, a background of development, I understand that ecosystem provides a lot of utility. And generally speaking, if there's utility, that means that the token has value. And if the token has value, people will be buying in and holding. So that's a very important thing to me, is that when a team or a project is focusing on the back end, on the actual ecosystem, for me, that's a very healthy thing. All right, let's continue. Let's keep on going down here. What else do we have? We have available on KuCoin, Maxi, PancakeSwap, BitGet. It is CertiK, certified and audited by Hacking, which is great. At least we know those smart contracts have been put through the ringer, and we can kind of trust them, right? So let's continue going down. What else do we have here? Top AI applications. They have a few here. They have about 6 of them that are already in circulation, already there for use case, which is good, and many of them still available or coming soon. So this is very good. So we got about 6 of them. We have OPENFABRIC AI bot, OPENFABRIC another AI bot, OPENFABRIC, lots of bots. What is this? This is a QR one. This is a meme one. This is sound, related to sound, 3D model, and a crypto bot, a crypto trading bot, which is cool, and drug discovery. I have no idea what that's about, but definitely pretty interesting. Now, if you keep on going down, there's a lot of them. And what really this project is trying to do is incentivize developers to come on the platform and create AI applications for the platform. So essentially, there's an incentive here to become a developer that offers applications to this ecosystem, giving ecosystem growth a real opportunity here. So this is a good thing. I like the whole idea to have the ability to get developers in here to deploy their own projects, but better yet, to be able to earn from their creations is a very enticing thing. So especially that AI right now is really hot. A lot of people are looking for those AI applications, and that's a lot of developers putting a lot of effort within that space. Venture into OPENFABRIC's AI apps marketplace. Like, again, what I said from the beginning, I was able to understand very quickly what they're trying to achieve here: ecosystem growth, getting developers in here, and then obviously have a marketplace where these developers can sell their AI applications, almost like an app store for AI. Great idea. I kind of really do like this, and I'm assuming that the OPENFABRIC token is eventually going to be the major currency here to allow individuals to buy and sell, products and services on the OPENFABRIC network. So that for me is an interesting thing. OFN has a clear value proposition without even me getting into much detail, but we'll of course get into a little bit more. I'm curious, what else do we got here? Let's click. See, it looks like an app store. You can see what I mean. It does look like an app store where individuals can buy different AI applications. Let's keep on going. You can see a lot of different options here. Good stuff. Like, it does look really good. Let's continue going down. We harness the power of blockchain, advanced cryptography, a novel infrastructure to create a new foundation for AI applications. Okay, a little vague there, but still fine. Scalable investment community. Let's kind of go through where the details and the important things are. Secure your seat in the new internet of AI, innovation, infrastructure. I think this is a lot of fluffy stuff. Okay, we can click some of this and then they'll give you a little bit of information. Join as a validator. That's an option if you want to be part of the network to enforce the strength of the network and secure the network, become a promoter, publish data, deploy infrastructure, and innovation, build and monetize AI apps. I think this is where the majority of what the utility is behind OpenFabric is this potential right here. Become an ambassador to create bridges and opportunities. Pretty cool stuff. Generally speaking, this is what they're about, which I kind of like. They did lay it out very nicely, OpenFabric ecosystem. But the ecosystem is much more than just this in the sense, because, within each of these little squares with these, different value propositions, there's detail within them, and they as a validator you can definitely get a part in part of that, and data publishing definitely part of that, but you have value in each segment, which is really good. Not just this. I feel like the retail market is going to be looking at just this as their major value proposition. So pretty good that they gave a little bit of information there. OpenFabric technology is here. Get early access on the alpha version. Pretty good. So you have some things to read and to get up to date with what's happening. Let's keep on going. The solution and how it works. OpenFabric is a decentralized AI platform where the collaboration between AI innovators, data providers, businesses, and infrastructure providers will facilitate the creation and use of new intelligent algorithms and services. So basically, again, the ecosystem is built around, these main factors right here: data, business, infrastructure, AI innovators, all that kind of good stuff is going to be put together in a marketplace and provide some major utility here. So we kind of see a bit of repetition here on the website, but at least we're zoning in on and being very confident what the overall value is here. Be among pioneers. They got a lot of logos here. You guys know how I criticize, websites with all these logos, guys. No, there's no difference. This is too much happening here. They need to be more selective and maybe organize what these are, what kind of a part of these are strategic partnerships. I can guarantee IPFS is not one of them. I can guarantee that there's a lot of these that are just, coin listings, maybe on exchanges. I don't see any, which is a good thing. Oh, down here, okay, we see Gate and some venture capitalists. Okay, at least they were able to kind of like separate that. But really, NVIDIA, okay, maybe that's Inception program. That's a good thing to see. What else we have? PIP. That's not really what I think. GT protocol. So I don't know, like, are these clickable? Can we learn about these? BitGert, I don't know what that is. This looks like a game. You get what I mean? So what we need, Dex Check, like, these are not partners, in my opinion. I don't know what kind of partnerships or relationships they have. They could be really good relationships, but without that detail, without that information, they just look like great logos and icons here. So we're going to have to kind of take them with a grain of salt. Do your research, I guess. Go check out their socials and, grind right through it to see if you can find out exactly how they are working together here. But if they're not going to put the effort to kind of give us that detail, that means they're not that valuable. That means the relationship is not that valuable, or else they would be boasting the importance of a relationship with Reef. I don't see that happening here. So let's keep on moving on. Become a partner amongst many, of course, and these are more trusted, validated by the biggest names in the field. So again, the venture capital ventures, you can see that all of them have to do with capital. They got backers and investors, something that I really do want to talk about with regards to the tokenomics. That kind of bothers me a little bit. Of course, I'm going to be very, very straightforward and transparent about what I find here. Both bullish and bearish scenarios need to be spoken about, and so far I like what it has to offer. No doubt, it looks great. A lot of the value proposition is there. What it's trying to achieve, I get an open source, open platform where AI innovation can flourish and share and earn, and so on and so forth. Publications, Cointelegraph, another area where I'm always very critical, because a lot of the publications, all they do is require a fee, and then they'll make a publication on you. So really, Microsoft, that's a cool one. Obviously, if we click that, where do we go? To the Microsoft OpenFabric on Microsoft Start, sorted by news. Who wrote this? and where they paid to write it. Guys, I'm not saying that that was the case, but that usually is the case where a lot of these publications are not very genuine, but it's still good publicity. Benzinga, Altcoin Buzz, Insider, these are great names, but again, are they valuable? And, you know, were they written, are these publications written on their own behalf, or were they paid? Just curious. Obviously, it's hard to really know. You can definitely, you know, do your research and get into a little bit more detail there. Check out our latest blog so you can check out what they've been talking about. What I like is the fact that they don't rely on this to keep them basically all the stakeholders and all of the individuals interested in the project. They don't rely on blog posts for the roadmap, essentially, which I really do appreciate, guys. A lot of these teams don't put the extra effort to get the roadmap, but good news is OpenFabric has a clear and well-defined roadmap, so I appreciate that, and we'll take a look at that as soon as I stumble upon it. Get the latest from the OpenFabric ecosystem straight to your mailbox. Great. And you can see we got some good certifications and guarantees and scores down here, and contacts. Okay, so what do we have here? The team. Let's open up that tab. Advisors, they should be on the same page. In careers, let's forget that. Overview of the tech. Research roadmap, let's do that. Maybe we can do overview just to see what they got there, if there's anything, any additional information. Overall, I want to do docs because I'm sure we'll get some good info there. White paper, we can take a look at that. And the light paper, there's a lot happening here. Ecosystem and token. Wow, there's a lot of tabs here. So let's see. A lot of the times there's repetition. We can fly right through it, but the more we can get confident with the project, it just means that we're able to get in, you know, build a position, especially if you're trying to invest here, with a bit of confidence based on fundamentals. Now, one thing that I want to bring to your attention is a lot of teams nowadays feel the need not to be doxxed. Unfortunately, that's unfortunate, because these guys are fully doxxed, which I appreciate and I give a lot of credit, because reality is I see a lot of trend of these individuals not being doxxed, which these guys are. You know, they have a great track record. They have a lot to offer. Polymath tech entrepreneur and Polymath core developer. Multiverse X, the old Elrond. If you remember that one, they did that rebranding. So both of them are part of the Multiverse X, old Elrond, you know, project, which is good. And then you got a software engineer with lots of experience, and of course you can check out his background, all of that, and you can. The list goes on, guys. All of the major team engineers and marketing and so on, business development, are all fully doxed, ready to kind of, you know, present themselves to the world. And that is a great level of transparency and confidence that they have to make themselves out there, get themselves out there. So that I give, you know, 10 out of 10 right there for that, right? Nice and clear and easy. So let's move on. What else do we have? We have some advisors. Okay, that's pretty good. Also very doxed. Technical advisor. I'm not sure who all these individuals are, but they got some people on the team. Not Citibank. Let's see what else. AIP13 Foundation. Maybe that's why they have the logo on the front page there. That could be kind of Labs, Decentralized Finance, Ethos X. So we got some good ones. Co-founder and COO of Opulus, Music Fungible Tokens. Pretty good. Okay, there's a lot of good names, a lot of good talent in here, so that's great. Let's move on. These are just advisors anyway. OpenFabric roadmap. So we got some clarity here. Not only do we have details as to what they're going to achieve, you know, throughout the year, but we actually have, you know, dates. You know, not precision, but we got quarters, you know, second quarter, third quarter, fourth quarter, giving us an idea where they're going to be allocating their resources, their time. You know, their human resources are limited. We get it, but where are they going to be focusing? And we can put a bit of confidence that they're going to be tackling these, you know, points within the time frame, which means that we can allocate or expect reactions in the market based on these milestones. Okay, so that's pretty good. Positioning. What do we got here? They're kind of like comparing themselves with other platforms. Guys, there's a lot happening here. Of course, Deep Brain, Effect AI, Ocean Protocol, Singularity. These are all major ones that are decentralized. And we got some, you know, Amazon, IBM, Google AI, all the major AIs. And then what they do is they just compare them to OpenFabric, because OpenFabric pretty much smashes them all based on all of these categories: smart economy, interoperability, computation, security, security, and so on and so forth. So, you know, if you want to get a little bit bullish based on what's out there with regards to competition, both in the decentralized space and the centralized space, this chart right here is for you. And you can see that there's no competition here, if you're gonna get, you know, kind of look at all factors included. All right, so let's move on. OpenFabric integrations, we have Reef, Algorand, Polygon, Harmony, Chainlink, Avalanche. These are major blockchains. These are blockchains that have been around for a while, multi-bull run blockchains. And OpenFabric brings AI to Web3 by supporting all major blockchain ecosystems, which is good because of based on the interoperability, we could expect that to happen. What's confusing to me is why I don't see Ethereum. It would be nice to see an ETH interoperability, EVM compatibility. But of course, if it's not there, I'm going to always have to think about, is it possible? Let's keep on going. That's that page. That's pretty good. We got lots of good info there. Technology, economy of innovation, services. I feel like this is going to have a lot of info. OpenFabric architecture, stakeholders, a lot of info here, lots of info. OpenFabric token, rewards, staking, payment, medium of exchange, and governance. So that means that it's behind a DAO, which a lot of the times, you know, we try to, you know, especially when we don't have a fair launch. Okay, let's be real about this. OpenFabric, we'll talk about tokenomics in a second, but it wasn't really a fair launch here, which means that there's a lot of tokens that need to be controlled. And how are they going to be controlled? Like, who do they belong to? Which wallet are they going to be placed in? Now, if there's a DAO, decentralized autonomous organization, we can, you know, with a certain degree of certainty, we can be rest assured that they are going to be governed in a decentralized way. Decision making, tokens, and all of the rest could definitely be, you know, decentralized through a DAO, which is good. Medium of exchange, a currency itself, payments for the different AI services and use of applications, and rewards for staking and so on, and other rewards that they got going on there, which is great. Usability, secure, decentralization. Got a lot happening here, and another roadmap. Positioning. So there's a lot of repetition, guys. You guys know that I don't really like repetition on the website because it bloats things up and it gets things confusing. So I think that needs a little bit. It needs to be cleaned up a little bit. What's this? Tokenomics. Okay, now this is where I wanted to get to. So I'm hoping that we don't bounce around too much. If I go here, I just want to see something. Is this the same website? No, it's not. Guys, there's so much repetition. You can see the OpenFabric documentation and then another documentation and another, like, there's too much happening. Okay, guys. So I'm going to, you know, dock marks here for the website needs to be cleaned out because there's too much happening here. So let's stick with this for a second. I'm wondering if this one is better, because if we go here to tokenomics right here and we go to token utility tokenomics, we can see the same chart, but it's a little bit more easier to read because here you have a background. It's not that bad. It's not that bad. It's okay. But let's use this one. At the end of the day, what we do see is let's jump right into the tokenomics, I guess. Initial market data. So when at TGE, when it first came out, basically at Genesis, total supply, fine, total 100% was out there. They raised some capital. Market cap at TGE at Genesis, circulating at Genesis. How many tokens were in circulation? 5.8%, so or 5.79. Fine. Circulating TGE of OFN. So this is how many tokens were basically in circulation at Genesis at the beginning, at the start. Because at the start there were some individuals that got in early, basically early stakeholders, and we can kind of look into what's happening here. The seed round, the private, and the calls, all of these are early stakeholders, and there's a few more that we can add to that list, like teams and advisors and potentially even partners and so on. So you can see that the overall token distribution in this way is very not fair launch. Let's put it that way. It's not that fair in the sense that we got a seed round that got, not only did they receive tokens nice and early, but they got it at a cheaper price. 8% was released at Genesis. Absolute, okay, and Cliff, 3 months Cliff, and then all of a sudden they get linearly released over 18 months. Okay, so they're going to be released into the market slow and steadily, and obviously private sale as well. They also got a discount. Coles got a discount, and they received all these kind of tokens. But what I like to look at it is that, okay, there's a balance between the linear vesting period and the cliff. So a few months in, and then all of a sudden they start to get unlocked, right? But just understand that they got a discount. for example, the seed round, they got it really cheap, which means that ultimately they have an incentive to sell, to walk away with some profits, right? And it's very, very possible seed round investors take a lot of risk, and they expect to earn off of that risk, to get rewarded for that risk. And the only way they're going to get really rewarded is by selling on the market. So there is going to be sell pressure, and this is not considered a fair launch, given the fact that there's early investors like this that have some of the tokens before the rest of the public. Now, if you notice that the public, 20 million tokens, amount of them, percentage is only 4%, while the private sale was almost 15%. Coles and seed and all of this, amalgamate to quite a bit, right? We're talking about slightly above 20%. So this is a bit of an issue, and then the public sale only has 4. I know that there's a vesting period, but there's also a vesting period for the public sale, which means that even the public is going to get their tokens unlocked, and they didn't get a really good discount like the previous seed rounds and private sale and Coles. So we have to understand there's a bit of pressure here for these heavyweights, the early investors, the venture capitalists, whatever you want to call them. They are definitely there putting pressure on price over time. Now, in the marketing, we can see that there is no discounts there, of course, and then there's the amount, how many. 2% for marketing, guys, is nothing. I feel like that's severely undervalued. It needed to be a little bit higher, and marketing is very expensive, and if you're going to get this thing going, we need to see marketing dollars. However, we are seeing that OpenFabric is getting a lot of attention, so that's a good thing that they're able to get the marketing efforts going without much of a budget. And of course, this is going to not be released all at once. It's going to be released nice and slowly over time, linearly, with a 2-month cliff. So there's going to be a moment in time where where we're going to be expecting some of the tokens to enter the marketing side of things. And of course, I'm expecting the marketing budget, this marketing budget, liquidity, and so on, to be governed by the DAO. Now, the team and advisors are also part of this mix by receiving 18% of the tokens. And of course, they have a cliff of 16 months, so it's going to be a while until they can actually receive their tokens, and they're going to get distributed over 36 months, which means that, there's not much dilution there, instant dilution. However, guys, there is still a lot of tokens flowing through early stakeholders, again, including these dudes right here, up here, and the team and advisors. So as you add all this up, you start to feel like, okay, this is a very centralized operation here based on the token distribution. I get it that they're going to be released slowly over time. That shouldn't be, putting too much pressure on the price, but generally speaking, it will, because after every unlock, we are going to see pressure, and that's the reality. That's how things work. Okay, so we'll keep an eye on that. Partners, again, who are these partners? Are they receive 5% and 36 linear starting right away. At Genesis, they get unlocked right away. Innovation Fund, I'm assuming that has a little bit to do with ecosystem, maybe not, and we're talking about 10% for Innovation Fund, which, okay. And ecosystem growth, guys, this is where they make up for a lot of the centralization and a bit of the issue with regards to token distribution. I like the fact that they're allocating 33% to the ecosystem growth for me, and right away, instantly, it's going to be unlocked, ready to go. The cliff, zero cliff, as soon as we get linear unlocks, they're going to go, these tokens are going to go to the ecosystem budget, and then they're going to get deployed to the ecosystem to allow that ecosystem to flourish. Because again, a strong ecosystem means strong utility for the token, and if there's strong utility for the token, people are going to want to buy and hold that token. So, and it goes up in value. All right, so that's a really good thing. I'm pleased to see that. But generally speaking, I'm not crazy about tokenomics. Not really crazy about it. There's a lot of pressure coming forward. Now, we do know that in a raging bull run, the supply, the demand outperforms the supply. So even if there are token unlocks, as long as the demand is there, they'll get bought up real quick and we'll make higher highs. But just keep in mind that when we reach the top of the bull run, when everybody's trying to take profits and walk away because they expect the cycle to end, guys, this thing is going to dump pretty hard. Why? Because there's a lot of individuals that are ready to take profit, that got in really, really early. Not to say that it won't last and it's not a good project for the future. There's going to be a lot of sell pressure in a bear market here. We got to understand that, because that's the way things work. Okay, so let's move on. And you can see the overall distribution here. Ecosystem is a big part, which really got me excited there. I kind of like that. And then all of these Innovation Fund. Okay, we got team, and we got partners, which pretty much could be considered the same thing. And then we have the calls and the private and the seals, the seed round. So we got a lot here. We already talked about that. Let's move on. What else do we have here? Oh wow, there's a lot of tabs. We talked about this. Where were we? We got through that. I think we did good here. Geez, this website is all over the place. So we can even critique the website. There's a lot to be cleaned up here. Tokenomic, token utility. Did we talk about this? Token utility, staking, rewards, payments, medium of exchange. So again, being able to make payments. Okay, reward. This is probably interesting because how do you get rewarded? As a transaction vehicle, enabling infrastructure providers to receive rewards for renting the execution environment to run the AIs. So okay, so you can you're going to be able to rent out hardware resources, which is good. It's a common thing amongst AI projects. Reward of AI innovations or innovators, adding value to the network, and reward for data providers. Of course, we know that AI requires a lot of data, payments, in-app purchases, and so on. Media of exchange, using it as a currency. Governance for DAO. The DAO is not out yet, if I'm not mistaken. I didn't see. I think that's in the roadmap. So the DAO, at the end of the day, the vision is to allow a lot of this decision making to run through a decentralized autonomous organization. And if you want voting power, you need to be a token holder. That's very typical, very typical. Exclusive access to various aspects of the project. Guys, read through that, of course. And this could always be added to by the team as things happen, like Discord channels and so on and so forth. Okay, so let's move on from that. Smart contract, that's fine. What do we have here? OpenFabric. We talked about a lot of the applications, Sound Fabric, QR Fabric. We talked about that. That's pretty good. Okay, so this page is pretty much done. We went through that. Interoperability. We can go through lots happening here with regards to interoperability. We saw it to be, we saw a lot of logos there earlier on about that. AI bots, infrastructure, explore tokens, token utility, smart contract, fundamentals, what's going on here, positioning, ecosystem, economy. Okay, this is a lot of good info, guys, lots of info. But for a deep dive purpose, yes, it's important to kind of get through all of that, but you know, you're just getting a brief idea of what it's all about. Sometimes it's just enough. Regulation, compliance, of course, that's what the DAOs generally try to do, is decentralize the operation as much as possible so they're not deemed a security, and that's a very typical strategy. Again, the governance model and so on and so forth. I'm trying to pick out what's more important here. Enterprise, reputation, security, references, so introduction, is an AI app, ontology. Yeah, lots of good stuff. Why OpenFabric, founding principle. So a lot of information, guys, but we're going off topic a lot of the times, right? We're going off. Okay, so we're doing, this is the white paper. A lot happening here, a lot of technicalities, a lot of repetition that we've already seen on the website. So if you want to get into that, they do have the typical white paper, and this is the ecosystem players. A lot of repetition again, guys, more and more repetition on multiple websites all over the place, and that really is a bit annoying, you gotta admit. Okay, so let's try to get back to the main website. We talked about the team, which is good. We saw the roadmap, the community, the stats, the docs we did. I feel like, yeah, KuCoin, we got a lot of engine starters, Seedify. These are all pools basically that started up, you know, at startup they got a lot on launch. This is where you can find them, but they're all sold out in 3 minutes, sold out, and you can see that's very a popular thing, right? So let's keep on going. I feel like the docs page had a lot more. OpenFabric token is the white paper, and we did this already, guys. We covered this pretty much in good detail. All right, so you guys know that I do offer you a graphic, an infographic, and we'll talk about that one in a second, but you can see that we do have a bit of details. It is a Binance contract at the current moment. I'm wondering when they're going to come out with their own mainnet, their own network. That's a very important thing. I would like to see that. And if we kind of look at their explorers, bin explorer, okay, so we need to see a little bit more. I would like to see them come up with their own chain if possible. That would be great, so they can have more control over the back end and how it works. That would be good. Even a modular approach to their own chain, that would be awesome, because that's a very common trend nowadays, a modular chain. which is good. We can see that overall it is a $32 million market cap, guys. This is very, very small market cap. Fully diluted, 265. It's still small, $265 million market cap. Fully diluted, given what it's trying to achieve. I think it's undervalued in my opinion. I think it still has a lot more to offer. Trading volume, we got circulating supply, 61 million tokens in circulating supply, while there's a $500 million supply, which means that there's a lot more tokens need to enter the market. And that's why I felt like it was very necessary for us to look at those tokenomics, because honestly, as tokens get unlocked, there's going to be pressure here. Now, as long as the demand outperforms the supply, we should be okay. We should see a lot of this happen. Guys, remember, previous bull runs, token unlocks don't matter as well. They didn't matter as much in the past, but you can see that generally in a bull run, everything is in demand, everything pumps, and I expect OpenFabric to do very, very well. All right, let's go through a summary and my overall verdict. OpenFabric, let's take a look at the ecosystem. Artificial AI, Fabric AI, QR Fabric AI, so many different applications currently on the ecosystem, which is really, really good. They're starting off strong. 10 out of 10 for there. It feels like the majority of the applications are in-house applications for the moment, but third-party applications are on their way, and I feel like that's a really, really good thing for the ecosystem. And obviously the strength in the ecosystem is going to have a lot to do with its utility. Utility, staking, payment, governance, rewards, currency as a currency, a form of payment, exclusive access to various different things that they offer, such as Discord channels and much more. The utility is very typical of a token and is very 10 out of 10, guys. They're very, very good. Roadmap, I'm very pleased to see that they do have some dates and at least a time frame as to what they're going to be trying to achieve in the next little while. Mainnet bootstrapping, that's really, really good. I expect them to have their own blockchain. Eventually, progressive feature deployment, enterprise feature activation, and OpenFabric DAO. That's in the roadmap, up and coming. So guys, that's a really good thing. OpenFabric DAO and all that. I'm expecting good stuff for OpenFabric in the next little while. 10 out of 10 right there. And then we have the team. The team is fully doxed team with lots of experience and expertise. Elrond Network Multiverse X employees, which is really good, and they are co-founders and founders of the project, and they're definitely again fully doxed with lots of talent. So 10 out of 10. Socials. The socials have a bit of an issue because they're coming down, but you know what? It's across the market. It's not just OpenFabric. So they're down 440% in the last little while, which is the followers itself. They do have 192,000 followers, which is great. But at the end of the day, why such a downturn of 440%? Maybe the market is, not doing so well, and it hasn't been doing well in the last little while, which means that, people are walking away from crypto in general, not necessarily OpenFabric itself. However, it would be nice to see them still maintain activity and do their posts, their tweets, their X posts, and they're actually down in the last 30 days, down 41%. Although they did post 40 tweets, it's still not as much as it was in the last 30 days. So they still need to crank out there with the community and do their thing, because that's the way they're gonna maintain their momentum. Basically, 6 out of 10 for that. And there's a little bit more of an issue, guys. I went on, I looked at their overall following, and I didn't like what I seen, and we'll talk about that in a second. But tokenomics, vesting schedules there, nice and clear. Circulating TGA at the beginning, when this thing started, there was about 5.79% that was already in circulation, and a good portion of all of these tokens belong to early investors, early stakeholders, and they do hold a good portion of the tokens. A lot of the tokens will flow through those early stakeholders as the project matures over time. So it's not really a fair launch. We got to keep that in mind, that token unlocks are going to put sell pressure on the price, and the price could come down, and then we are hoping that the demand outperforms that extra supply to keep the price afloat and in fact making those higher highs. So that's something that we need to consider. The partnerships, many great partnerships. I would have loved to give this a higher ranking here, but because there's no details, because there's so many all scattered all over the place, and I can already tell that some of them are not really strategic partnerships just by looking at those logos. I have to take it with a grain of salt and say, look, if they have very strong relationships with individuals, they need to provide some sort of, maybe a blog that they, post about what kind of information, what kind of relationship they have with those partners or those, relationships. So that's an important thing. Details on relationships would be super, super useful. Okay, we went through some of these metrics already. Let's move on forward. My overall verdict: 21% of the distribution is distributed to early stakeholders, seed, private, and calls. This is problematic. Like we talked about, discounts on price was given to early stakeholders. We already talked about that. So this is going to be something that I'm really taking into consideration. Now, mind you, we also have to take into consideration that this is one of the hottest topics in the last while. AI and even non-crypto or even crypto. AI is very, very popular, and it could be a narrative that definitely explodes here in the crypto space. So AI, a narrative and a part of and creating an AI marketplace is definitely interesting. 18% of the tokens given to the team and advisors, which is quite a bit. I couple them together because they're very similar individuals. You got to understand their overall vision, what they're there for, right? At the end of the day, 18% for those individuals is quite a bit. And if you amalgamate the early stakeholders with the team and the advisors, which again, these individuals have very similar characteristics, and not only that, they got in early with great discounts. They represent 39% of the tokens, and those tokens will flow through these early stakeholders at one given point. Yes, there's a vesting schedule where these tokens are going to be unlocked over time, slow and steadily. I get it, but just understand that that is still something that could cause negative pressure on price, especially once we reach a very frothy top of the bull run where we start to get into a bear market. Expect that a lot of these people that got in early are going to take profit. Okay, so this is why you have to be prepared to also take profit when you see yourself in some in some major gains. 5% in partners. Should partners be paid? So we noticed that there was a certain allocation that was given to partners. Why would partners be given 5%? A partnership, technically speaking, is one that, they kind of work together and they kind of bounce off of one another. If 5% is given to partners, then what is OpenFabric receiving in behalf? Are they paying these partners to give them service or give them something? And for me, that's not really a strategic partnership. That means that they're just customers of some sort of network or some sort of service or whatever the case may be, and they're just paying in currency of OpenFabric. And for me, that's a bit of a problematic thing. That relationship is not strong enough where OpenFabric could negotiate a real partnership where they are working together and scaffolding each other with the same objectives, right? So that bothers me quite a bit. In fact, it shows me that these partners, all they're interested in is token allocation. Not a good sign for me, personally speaking. 33% allocated to the ecosystem, which I approve of, which I really appreciate. I believe that is something that does counterbalance a lot of the negativity in the rest of the distribution. And I mentioned before many times that the utility of a token is directly related to its ecosystem, and then of course the value of the token is directly related to the ecosystem and by default. So utility, ecosystem, utility, and value of the token, direct line of relationships right there, which is really good. Clear roadmap with dates. I appreciate that. That's right now it's something that a lot of projects don't feel the need to do, which I appreciate that they did. And what I also noticed is that the X followers, at one point they were receiving 10K followers in 4 days. In an environment where people are currently losing followers. Guys, I'm not saying that they're manipulating. I'm not saying that they're buying followers. I'm not saying that. But it does look very manipulative. Okay, 10,000 followers in 4 days is significant in an environment such as what we have now here in the crypto space, where we're seeing a lot of negativity, a lot of outflow, and to see so much hype in 4 days, so many followers in 4 days, it keeps it questionable. Okay, guys, so keep that in mind. Now, my verdict overall, my target, guys, are going to be very modest. Let's say that we put a target and we say that it's going to catch up to AGIX, Singularity. Right, so if that's the case, it does catch up. We're looking at a $17.77 OpenFabric token, which is a 35x more or less. I say, you know what, guys, let's be modest, right? That's still even modest because it's not even Singularity. AGIX is not even the biggest AI out there, right? We're talking about maybe $1 billion market cap, which is still very healthy. If OpenFabric can reach that level, right around that zone, we're talking about a $15 OpenFabric OFN, which means that we could do at least around 30x or so, which is super, super healthy. Now, given the fact that there are some issues, you know, tokenomics, which can be overcome because, of course, we have stakeholders, early stakeholders, venture capitalists coming in, helping the project with regards to liquidity, giving them capital. And we know that that's a very important thing, especially for a new project, because then when you're trying to get listed on an exchange, things become a lot easier to do that. Because if we look at the listings that they currently have, they have KuCoin, they have Uniswap, BitGet, MEXC, and PancakeSwap, which means that there's a little bit more there that can be, you know, they can get listed on, like, of course, Binance and Coinbase and other exchanges that are up and coming. So they need that liquidity, they need that capital, which I understand. Venture capitals, that's what they're there for. They're there to offer that liquidity. But still, guys, there's some negativity associated to that relationship. And we noticed that fair launch in the past does also have its limitations. So it's a give and take. You know, there's a spectrum here, of course, of what's good and what's not good. But overall, I'm giving this project an 8 out of 10 because there's a lot to offer here. And over time, all of these issues with regards to tokenomics can be resolved. And overall, it become less important as tokens enter circulation. Okay, so guys, so that's a really important thing here going forward. And I know you're here to talk about charts as well. So let's jump right into the chart to see what is going on here with OpenFabric. Generally speaking, we can see that it's kind of been ranging a little bit here in a very wide range. And if you look at the price action, it could be ready for that bounce to continue to the upside. And of course, a lot of this bullishness has to stem from Bitcoin and Ethereum. Let's look at this in a little bit more detail. In the last little while, we have seen Bitcoin rally up a little bit, you know, came down, came up, did its thing, and it's kind of still ranging. You know, it has been showing a bit of negativity, and the market in general has been showing a bit of negativity, and we can see that altcoins in general, you know, for the most part, have been taking the back seat. And we do expect eventually an altcoin season where we can see the altcoins catch up to Bitcoin, flourish, do their thing, bring lots of, you know, inflows, and that would be great. But in the meantime, what we're doing is we're battling and we're accumulating, and this could be considered a nice accumulation range. The reason why I am left a little bit reserved with regards to entry as far as where I'm going to be buying the dip is the fact that we have a bit of weakness below here. We did fall through the weakness before. We did try to fill up the weakness before and get a few buy orders filled. You can see that some of the volume kind of did step in and into the volume gap, and then we bounced right above and we held the top of the volume gap for support, which is really good. You know, obviously a sign of strength here, but all of which, you know, the price action and the momentum stayed sideways. You know, as long as it stays sideways like this, you know, we can't expect major moves. Now, the volatility, which is the orange line, is starting to move to the upside, which is a great thing to expect volatility run up. As long as the momentum is also running up, we're going to be trading the volatility to the upside alongside the momentum. And what would be super great is to see some green dots down here. I would love to see a few green dots to give us a bit of confidence that the overall price action is ready to start moving to the upside. Similar to what we got here, a nice green expansion. Nice move to the upside. Now we got a retracement. Now do we get another green expansion to the upside and maybe make a double top, or at best start getting to extension levels, $1, maybe $1.30. Those are great extension level zones. But in the meantime, we're seeing that the trend is still pushing down. We have no indication just yet that the reversal is in play. We got, you know, an expansion to the downside with regards to trend, blue expansion. We didn't get across to the light blue. We didn't get a bullish divergence just yet. The MACD EMA facing down red histogram bars, and we're not getting really much here that we're suggesting a bounce. However, DCing is not a bad scenario. If you buy here, you're good. If you buy here, you're good. I believe that this range right into this area could be the best opportunity to buy. In fact, if you look at this top and these bottoms, if we happen to come down to this level, personally speaking, I will be buying the dip quite hard. I will be scaling up my bags and buying in and accumulating as much as I can into this area, because I feel like this area would be one of the last lines in the sand to be protected. We have a lot of accumulation down here, no doubt. We got a lot of volume into this move to the upside, but we don't know what Bitcoin has in store. Again, if Bitcoin starts to come down again for another lower low and another lower high over time, Bitcoin could come down to about 52K, and we can see that the altcoins might come down for another lower low, as we already did made a lower high here. And if the trend is going to be our friend, we could even still go up a little bit higher and still make a lower low in comparison to, sorry, a lower high in comparison to this high, and then still come down for another dip all the way down to this level. So I'm always psychologically and economically preparing my portfolio for such events, but at the same time, I am happy to build into this level just in case we do continue getting support around these horizontal supports. The only issue is where do we put our stop loss? It's very difficult right now. We don't have a structure that's giving us clarity here. So this is why, if you plan on getting exposure, if you plan on getting your feet wet and you want a bit of exposure to this asset, what the best thing to do is to start small and accumulate over time. Because if we had a strong sideways accumulation phase with great horizontal support where we can put our invalidation at, it would be a lot easier. But if you're going to put a stop loss all the way down here, guys, what about if we fall through the volume gap again? That would be a very dangerous thing. You're going to be in a very red scenario. If you put a stop loss here, there's not enough support there to suggest that that's where it should be placed, right? We got one bottom and then a recovery. What about if this is another dead cat bounce? What about if the current price action is another lower high in comparison to this high and all this? What about if we make another lower high and make another lower low and fall through the volume gap one more time and come down to the bottom of the volume gap? This is the risk you take without having clear structure, because this technically is like going to be a diamond shaped pattern. This is called whipsaw price action, straight up, straight down type of price action that gets people really wrecked. So be careful. Without structure, it's hard to plan out a trade, but it doesn't mean that you can't build your position little by little over time, just in case this thing starts to run. At least you have some skin in the game to call yourself a profitable trader. Guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. Take care, guys. Have a good one. And don't forget, buy the dip.